be guessed you were from the town that I love best. Talk Memphis, I wish you would. Talk Memphis, you sound so good.
It works.
They're in business.
They got a really good, return
That's
on
right.
investment.
So number 4 is just flat out investors. This is what I would say that we find the most of. They're the opposite of observers because they take action.
Yep.
They're opposite of speculators because they minimize the risk.
Mm-hmm.
And then they're opposite of collectors because they buy on basis of investment value.
Yep.
Whereas, we mentioned our collectors, they'll be willing to overpay just because they like it.
Right.
So let's talk about the investor. Have an expectation of financial gain, but they follow the process and they have a way to analyze deals to limit the downside. I love that.
Mm-hmm.
That's an educated process.
That's for me. That was kind of definition for me of calculated risk.
Mm-hmm.
There's financial gain. Have ways to limit the downside. What's the worst case? Build your model around protecting yourself against the worst case or preparing for it, and go for it.
Yeah.
So
this person buys right.
Yep.
They work numbers. They see different opportunities in different areas. They maybe zig when others are zagging.
Mm-hmm. Yeah, because they're trying to buy it right. They're trying to buy something below market value.
That's right.
Because you got that, your deal is made on the buy. We've said that over and over again. So that has not changed.
Any investment, I like to say this too. Any house is a good buy if you buy it right.
Yes.
In any house, any area, and anything is a good house if you buy it right.
Yep.
You can turn that into an investment.
I mean, Doug's a perfect example. We're trying to, remove some of our, not so good performers, lower end stuff. And, at the end of the day, we're about breaking even on some of that stuff. And sometimes we make some money. So that's been been our downside because we bought it right. If we bought, a house, in an area that rents for $500 and we've spent $45,000, I'm probably not. But if I spent 15 or 20, it's probably still be okay.
So, as investors grow, they move their knowledge. So the observer collects this knowledge, right?
Yep.
I would say
they got the knowledge.
They have it, but the investor also has that knowledge. They just move it to action.
That's right.
I love
shift.
Yeah, and we'll this is one of our headlines over here. But creating wealth takes action.
Mm-hmm.
I mean, it's not. I don't know anybody that's created wealth that hasn't been a go-getter, an action person. I mean, I don't know anything that you can just sit back and earn wealth. Not a living,
right?
But wealth.
That's right.
Let's see. Move on. The people say it's wishful thinking, right? Agree.
I think, that's what I was trying to explain to earlier as far as investor. You can start moving towards speculator or collector if you want to as you build your wealth. That's one thing that I'd like to articulate. I mean, for me to go buy or put $250,000 into a deal when I was 27 looks totally different than me finding $250,000 to put into a deal now. And so the conversations and the speculation and, would I take more risk now with a little bit of money versus I wouldn't do it years ago? Does that make sense? Like,
yeah.
I'm going to step into something. If it's got a chance for a high return and I know what my risks are, my downside, and, done the same kind of analysis, but there's potential for higher return. Now you might want to go for it. You might want to go in that development. For example, say we have a buddy that's got a 20 lot development. He needs somebody to go in with them, help get bank financing, and you can be a partner. You might not do that,
but
when you're, just starting out.
But now,
if you've been an investor for 20 years, you might want to say, okay, I'll put my name on that note to go to, if that's what it takes to get the bank to loan them money. And your downside is you own this plot of land that's worth X, and you got to spend, $500,000 to fix, you know what I mean? Like,
yeah.
So,
well, and it goes back to last week's show is, your mindset change to willful thinking. That's one of our notes here. I mean, you've got to have the right mindset to keep moving forward. I think our titled investors here do have that. think about action all the time and take action. I mean, you can't just think and have it happen. I mean, you've got to move into actually doing something.
I can't get enough.